What are the top 10 tax tips that real estate agents should know right now? Now, the number one thing to really keep in mind here is that you are a business owner, okay? You need to now realize that what you do that is like other businesses, that is actually where you will have the best cash flow, build the most wealth, and actually save the most taxes. Now, if you want to follow along on this, check out the link below, and you can go to the article to grab this for yourself, plus other goodies. Number two, set aside 25 to 35% of every commission for taxes. Oh my gosh, that sounds like a lot. Set up a separate bank account, move that money into it. Number three, do not sleep on deductions, okay? It's more than office supplies and cell phone, right? There's a lot of obviouses, but I've also got a link in the body here to a more than 100 list of expenses for real estate agents. Mileage versus actual expenses when we talk about your auto. Number four, you got to choose wisely in that first year. That's really the key here. In the first year of your use of that vehicle for business purposes, track your miles and then go, okay, of my miles times the mileage rate, well, what's my deduction? Or what's my business miles as a percentage of my total miles, and multiply that by the actual business expenses, including depreciation, and what's higher. The home office deduction, number five, oh my gosh, it's so misunderstood. For a realtor, there's no way that you're not working at home. You want to establish a home office. It's not a flag. Hear me. It's not a flag, okay? Show that home office, declare it, because there is case law out there in tax court cases where when somebody deducted a home office, it allowed them to take those miles directly from their house when going to a business activity first. Number six, quarterly tax payments are a must. Why is this a secret? Well, it's not really a secret, but you know what? So many don't realize that if you don't pay quarterly estimates, you don't pay your taxes evenly throughout the year, slap yourself, dump a big old bucket of ice water on you, you're going to pay penalties and interest. That is insult to injury. You've got to pay in quarterly estimates April 15th, June 15th, September 15th, January 15th. There are underpayment penalties for not getting those estimated tax payments done correctly or timely. There's some safe harbors to it to help you ensure you don't get those penalties, but don't get added to your tax penalties and interest. Number seven, you got to hire a tax professional that understands the Realtor. Number eight, here's the big one. Consider setting up that LLC, and when the time's right, electing for it to be taxed as an S corporation. Why? Because when you are not an S corp, your net income as a Realtor is received on Form 1099, and that net is subject to self-employment tax. That is an additional tax on top of your income taxes. It's 15.3% on your net income up to the Social Security limits. Now, if you're an S corporation, that net income as a Realtor still paid as a 1099, but now to your LLC taxed as an S corp, that EIN, well, that net income is not subject to self-employment taxes. Number nine, retirement contributions. This is a huge tax win. See, this is the best deduction of them all because it's money to you. When we are putting money into retirement, we are putting money towards us, our future, our wealth, and we're getting a deduction for it. Number 10, don't wait until April to figure it out, just as I told you in the beginning. With all of this, to be a super successful Realtor year in and year out, it comes down, in my opinion, to one thing: not overpaying taxes. You know, 87% of Realtors basically don't make it past 2 years. And you know what's really interesting is about the same percentage of small business owners and Realtors don't become S corporations. I've got a whole video series I'd love for you to check out. Links in the bottom. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.